Hello, you're welcome to FinInvest Niger. My name is Tom Princeville. I'm a certified securities and investment specialist, and I would like to carry out fundamental analysis of Mecure Industries Plc. Mecure Industries Plc. This company is in the pharmaceutical stroke healthcare sector of the Nigerian Stock Exchange. Now, we will discover that this is the result for the third quarter. The third quarter ended September last year, 2025. So the fourth quarter result is not yet out. So we have to make do with what's available currently. And this is the third quarter 2025 as against the corresponding third quarter 2024. So the revenue here for the company was 60.009 billion naira, 60.009 billion naira as against 30.216 billion naira. So you could observe the increase is somewhat remarkable from 30.216 billion to 60.009 billion. There was an almost 100% increase in the revenue generated, as you could observe in the table here. We now go to the gross profit, the company's gross profit for Mecure Industry. The company generated a gross profit of 10.028 billion naira, 10.028 billion naira, as against 20.409 billion naira. All right, you could see observe almost a 100% increase there, about 100% increase in the gross profit, which is remarkable, is commendable. That's is excellent. We also want to take into consideration the company's operating profit. So the operating profit here is reasonably spectacular. Actually, there's a growth from 5.030 billion to 13.018 billion, from 5.030 billion to 13.018 billion. In this case, the figure here more than doubled. Actually, it went beyond 100%. Now let's highlight the company's profit before tax. For the profit before tax figure, the figure for the third quarter 2024 was 2.226 billion naira, 2.226 billion naira, as against 6.370 billion naira, from 2 billion to 6 billion. All right, that's an increase of about 4 billion naira. All right, an increase of about 4 billion naira, and the figure has gone up by about times 3. Now let's observe the profit after tax. For the profit after tax, the profit grew from 1.558 billion naira to 4.459 billion naira, from 1.558 billion naira to 4.459 billion. That's an increment of more than 100%. That's quite commendable. So we now move down to the earnings per share. Earnings per share is the most important figure in this analysis. And so the earning per shares for the third quarter 2024 was 39 kubu, 39 kubu, as against 1 naira 11 kubu for the third quarter 2025, from 39 kubu to 1 naira 11 kubu. That's slightly above 100% increment. It has more than doubled, which is quite impressive. So we are through with this segment, this section of our analysis representing the company's profit and loss statements. All right. We now want to go to the other parts of the analysis, which is a kind of skeletal bare bone version, summarized version of the company's balance sheet as well as its cash flow statements. Now, let's start with the cash flow here. The company has a cash at hand and in the bank of 2.484 billion, 2.484 billion, which is quite commendable considering the level of profit that was accumulated here. The company has a robust cash management. That means it can easily buy its shares and take care of contingency, emergency kind of expenditure without resorting to bank borrowing, expensive borrowing from the bank. Now, this is the company's equity or shareholder fund, which is 17.818 billion naira. This is telling you that when you subtract the company's total assets from its total liabilities, this is the figure you are going to get, all right, at 17.818 billion naira, which is what is called the equity or the shareholders fund. We now go to the company's price. The company is selling at 104 naira, 104 naira, and the shares outstanding of the company is 4 billion. All right, 4 billion. So when you multiply the company's share price by the shares outstanding, you will arrive at 416 billion naira. 416 billion naira. This is the current size of the company and is determined essentially by the company's price. If this price is reduced to maybe 50 naira or 52 naira, this particular value will equally reduce by 50%. All right, so this value is what controls this. And if you happen to reduce the number of shares outstanding, this particular market capitalization will equally be affected, will equally be reduced. Now, we want to critically look at the company's PE ratio. That's the company's price earnings ratio. Let's see how to calculate that. So in this case, discover that this particular PE ratio is obtained by dividing the company's share price, which is what 104 naira, by the earnings per share, which is 1 naira 11 kobo. All right. So by the time you divide 104 naira by 1 naira 11 kobo, you are going to arrive at this. You are going to arrive at 93.69. 93.69. This is where I have a little problem with the company. This particular PE ratio is very, very high. All right. It's almost getting to 100 for this company. All right. If not for this particular high PE ratio, I would have given the company a buy recommendation. But for the fact that the company is very expensive, I think I will remain neutral. And this neutrality is just a personal opinion. All right. It's not binding on you. And you're not even bound to accept. You can reject it. You can go ahead and buy or sell or whatever. Okay. But personally, I would maintain a neutral recommendation for this company. All right. I'm neither buying or selling. That's my recommendation. And be mindful of the fact that it is strictly a personal recommendation. All right. You're not bound by it. Okay. So the entire exercise is for academic purpose. It's academic in nature, and it's also for entertainment purpose. All right. And so you need to actually carry out your individual, analysis to be able to buy or sell, as far as this particular company is concerned. And not only that, you would discover that. Let me still talk about this particular figure, this PE ratio. What this figure means is that you are paying 93 naira 69 kobo for 1 naira worth of the company's earnings. That's what you are paying. All right. That is, it's like going to the market and you are buying an item that is worth 1 naira for about 94 naira. That is what it means in layman language, in plain English. You are buying something that is worth £1 for as much as approximately 94 naira. That tells you how expensive this company is. Apart from it being very expensive, I think this particular company is a good buy. But if you still believe that if you believe the company will continue to grow at this rate, well, you can go ahead and buy. But it's somewhat dicey. All right, it doesn't really portray value investing. All right, but if you are a growth investor, a momentum investor, you're a type that can bear risk, you can go ahead and buy. All right, please like this video, subscribe to this channel, and help me to share this particular content to people in your community. And on a more important serious note, if you are very interested and enthusiastic about investing, please then try and contact me, so that I will see how I will see how I could be of help, of assistance to you. All right, so thank you very much for watching.